Hey everyone, welcome back to Corporate Decoder, the place where we break down financial documents by looking into BlueOne Card's Form 10K with a smirk revealing their current financial heartbeat. Prepare yourselves for a dive into a company that's charting a new course through the complex world of financial technology. We'll uncover their strategic shifts, analyze the numbers that tell their story, and see just how this transformation is playing out on paper. Before we dive deep, if you're all about understanding the real story behind corporate filings, make sure you hit that subscribe button. And if you want to join a community of fellow financial detectives, our Discord server is linked in the description below. This is BlueOne Card Inc.'s annual report for the year ending March 31, 2025. It's like their yearly checkup showing us all the important details about their business. The company essentially tells us they are a financial technology company and are going through a big change. They've acquired Millennium EBS Inc., which is a pretty sophisticated fintech platform provider. This acquisition means BlueOne is moving away from its old business in prepaid cards to become a major player in providing advanced payment infrastructure to banks and other financial companies. Think of them as building the plumbing for the digital money world. Their whole mission is to help banks and financial groups update their old payment systems with modern, flexible, and safe technology. They want to be the go-to for anything related to payment innovation and making sure everything follows the rules. This acquisition of Millennium EBS is a really big deal for BlueOne. It completely changed how they do business and where they're headed. Millennium brought a top-notch technology platform and a lot of knowledge about financial technology. This means BlueOne can now aim for a much larger market, focusing on business-to-business services in banking, payments, and the fintech industry. They want to use the Millennium platform to offer a whole suite of payment hub services. They're shifting their focus and even their website to a new domain, BlueOnePaycom, to reflect their move into digital payments and cryptocurrency services. It seems like the company heavily relies on a couple of key people, James Koh and Shinto Matthew, who are really central to their operations and strategy. Now, here's where things get really interesting from a financial perspective. BlueOne Card has been around since 2007, but hasn't really brought in significant money yet. They've actually been losing money since they started. This is a pretty big red flag for investors. Let's look at the numbers for the year ending March 31, 2025. They reported a net loss of over $1 million. Even more concerning, they used more cash than they brought in from their normal business operations. With a negative cash flow from operations of over $300,000, they also have an accumulated deficit, which means total losses over time add up to almost $5 million, and they owe more in current liabilities than they have in current assets, meaning they have a working capital deficit of over $1.5 million. This is perhaps the most critical statement in the entire report. When a company says there's substantial doubt about its ability to continue as a going concern, it means they're questioning if they can even stay in business for the next year. This is serious business. This just reinforces the fact that for over 15 years they haven't really made significant money. This isn't a new problem, it's a persistent one. Their stock is traded on the OTCQX market, which is generally for smaller companies. The report mentions that trading volume is limited, meaning it's not very easy to buy or sell their shares. Let's peek at their balance sheet as of March 31, 2025. This tells us what the company owns and what it owes. As of March 31, 2025, their cash on hand was a mere $46,018. That's less than some people's car payments. They've invested about $4.5 million into internal use software. This is significant, especially considering how little cash they have, and it's tied to their new fintech platform. And then there's goodwill, a staggering over $10 a dollar bollen. Goodwill typically arises when a company buys another company for more than the fair value of its assets. This is almost entirely from the Millennium EBS acquisition. It shows how much they valued the intangible assets like brand, customer list, and technology of the company they bought. Their total liabilities, what they owe, are about $110.7 million. Looking at their equity, it's about $799 million. But a big chunk of that, over $5.8 million, is from the non-controlling interest, meaning the part of Millennium EBS that they don't own. This basically means the actual equity belonging to BlueOne's own shareholders is much lower, around $2 million. In the statement of operations, it shows a net loss of over 1.1 million for the year ending March 31, 2025. And when you factor in the portion belonging to others, the loss attributable to their own common stockholders is about $1 million. This translates to a loss of about 8 cents per share. Operating activities used up $317,000 in cash during the year. They spent no cash on investing activities this year, which makes sense given their low cash balance. They did get $288,000 from financing activities, mostly from selling more stock. Interestingly, they haven't adopted a formal code of ethics because they have a very small board of directors. This suggests a very lean operation, which for a public company is unusual. There's a note about delays in filing ownership reports by some executives and directors, which, while not a direct financial issue, points to some potential governance hiccups. Their CEO, James Koh, is owed a substantial salary of over $200,000, but the report states it hasn't been paid. This salary is deferred, meaning the company plans to pay it later when it has the funds. It's a sign of the company's tight cash situation. In addition to deferred salary, the CEO has also provided advances to the company, with over 6,500 outstanding as of March 2025. And then there's Shinto Matthew, a director, and also the former owner of Millennium EBS. He's owed over $500,000 for the acquisition and consulting services, with a payment extension pushing the debt to December 2025. Looking ahead, the company has future amortization expenses for the Millennium Payment Hub platform, which is expected to be around $400,000 annually for the next several years. This is a cost of doing business with their new asset. On the tax side, they have significant net operating loss carry forwards, meaning they can use past losses to offset future taxable income. This is a positive as it could reduce future tax burdens, but only if they become profitable. However, they've had to record a full valuation allowance against these deferred tax assets, meaning they don't expect to use them anytime soon. So what's the big picture here? BlueOne Card is in a phase of significant transformation, heavily investing in a new fintech platform through acquisition. The strategy seems sound, aiming to capture growth in a high-demand sector. However, the financials paint a stark picture of a company operating on fumes. The lack of substantial revenue, persistent operating losses, and a serious going concern issue are major risks. They are essentially betting big on the success of the Millennium EBS acquisition to turn things around. The company is trying to move into exciting areas like payment hubs and crypto-related services, but the current numbers suggest a long and challenging road ahead. The reliance on key executives, the deferred salaries, and the significant debt owed to a related party all highlight the financial tightrope they're walking. In conclusion, BlueOne Card is a company looking for a comeback, but it's still very early in its journey. The potential is there, but the financial health indicators right now are weak. It's a high risk, potentially high reward situation that hinges entirely on the successful integration and monetization of their new fintech platform. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.